The following is a short clip from our conversation with Elyce, the co-founder of multi-billion-dollar fashion brand Kate Spade. Kate Spade is a multi-billion-dollar fashion brand that revolutionized the affordable luxury market in the early 2000s. After selling Kate Spade, Elyce started yet another highly successful fashion brand called Frances Valentine. In our conversation, Elyce shared the key principles and secrets behind her success in building incredible fashion brands. I hope that these insights are valuable in your understanding and approach to starting and growing fashion brands.
Looking back into your career so far, what do you think was the first biggest major setback or challenge? Was it more personal? Was it more emotional? Was it logistically, like you had to get out of the farm, right? What do you remember was the first challenge to get you where you when you were, Elyse in the farm to Elyse to then?
Yeah. So I think probably it's been a consistent challenge throughout my career and starting up two businesses is cash flow. It's always an issue. And I think for most entrepreneurs, it's an issue. And even when we were starting Frances Valentine with Kate Spade, we had to be really scrappy. We didn't spend money on anything. We found furniture or bought furniture at flea markets for our offices. And um, we we all had to put in personal money when we could and, fund the business for a while. We never took outside money until several years into the business when we got a credit line at the bank. For Frances Valentine, we actually had money to start this business, but as you grow, you constantly need capital. And every entrepreneur knows this. If you're successful, you need more capital to grow the business because you're getting larger orders for the following seasons and you have to produce all those things. So I think the constant theme throughout is just raising capital on a consistent basis as you grow.
Right. And what are your thoughts on going through the process of, having limited cash flow, which is, as you said, it never stops. It's the problem in this industry.
Right.
But when you're early on, you have very little experience, and having very little experience results in even less cash flow because
Mhm.
of, bigger and more mistakes.
Right.
So how do you balance that equation, right? So how do you balance the lack of cash flow with the lack of experience?
Well, I think part of that is, and we didn't really have to experience this when we were younger at Kate Spade, just because we were determined not to take anybody's money. And, I hate to say it, but times were different then. We were very different in the marketplace, and we were kind of new kids on the block, and people weren't really doing what we were doing. So I think it was a little different then, and the economy was different. Today, it's, I think, tougher to get capital. And I think one of the things that is helpful always is to go to as many events, as many networking opportunities as you can, and meet as many people as possible, because you never know when you might meet the next investor or someone who's interested and loves your idea and buys your product already, and they may become a friends and family investor. Because I think friends and family investors are really, they're always generally always the seed money for beginning entrepreneurs. And it's how we started when we went out to raise capital in 2018. We went to friends and family who had known that we started a successful business and sold it before and believed in this brand. And so, I think that is a good way. If you are young and you don't have any money and you feel like you don't have any contacts, make them, because it is really the best way. Whether you're, at if you went to university and there are alumni reunions or sorority or fraternity reunions, anything like that, any place you can meet a new group of people, I would encourage people to go to.
Interesting. So cash flow is always the problem. The only difference 20 years ago versus today is that no, well, I mean, maybe cash was less available back then, but there was also less competition and therefore less dilution of profit margins. And also, I think a big problem today is that the nature of capital has changed. Capital today is very, very transactional, and it pushes low valuations, which obviously puts brand owners in very difficult situations. And I think that, just like you said, attracting angel investors or people that are putting their own money in the business is just the right type of capital that you want to look for. Because fashion is a very difficult industry to raise money in. You need investors that, number one, understand the nature of the industry and just believe in you as an entrepreneur more than
It's
like on the business plan and on the financial figures and the financial projections and the nature of the economy and the market and all these different variables that, you know, established investors or accredited investors usually look at.
exactly.
Interesting. And when you, because I really want to, I don't know if I should really go into, and let's stay in the capital conversation a little bit longer because I think it's
Mhm.
just such an important problem for startup brand founders.
Especially today.
Yeah, yeah,
Yeah.
100%. So let's put a hypothetical scenario. If you had to start from scratch today with the current challenges, without the connections that you probably have now, what would be the approach? Would it be let me figure out where I can raise money from? Would I start an e-commerce brand and try to get one product right? Like, what would be your strategy?
Oh, that's tough because there are a lot of avenues you can look at to go to for fashion. It's, obviously you can use factors. And I think if you don't have any other means to find capital and you have no contacts, factors may be a good way to go if you have a healthy wholesale business. Um, Credit lines, if you have, a good credit history, banks are pretty, and if you're willing to, sign a personal guarantee, that's always a good way to go. But I think it's tough everywhere right now. And I wouldn't have said this 2 years ago when valuations were much higher and interest rates were much lower. But I think today is a particularly difficult time.
Right. But do you agree that disregarding of the type of environment that we're going through, whether it's good or bad, of course, right now it's bad. A couple of years it was good, but that's always repeating itself in cycles. So
Right.
would you agree that at least that having the mindset that you should adapt in today's environment, so in the worst type of environment, is the most productive mindset to have long term, disregarding of the environment is good?
I do. I mean, I would still do it the same way. I would go out to friends and family. I would use factors if I had to and get a credit line at the bank. I'd
Right.
still
In
do.
fact, right, right. In fact, there's just so people that don't know are kind of like financial intermediary. How do you say that? Intermediate. God damn. How do you
I don't know
intermediaries?
which
Is that how you
word.
used to pronounce it?
I
Yeah.
don't know.
God, that's a
I
difficult
don't know
word for me.
which word you're trying for.
Like oh,
Intermediary?
intermediary. That's the one. Intermediary.
Yes.
It's like a
Yes.
financial
Okay.
intermediary, like an agent that provides cash.
Mhm. Right.
So for people that don't know, wow, that's a very. I'll practice that word afterwards.